First Republic doing a complete 180 today from Monday, now leading a rally of the regional banks. You see it's now up over 30% in the last hour of trading. This comes after reports of another JP Morgan-led rescue plan for the bank and a speech from Treasury Secretary Janet Yellen this morning at the American Bankers Association. She talked about the state of our banking system and plans to monitor institutions going forward. Listen.
The public should have confidence in our banking system, and it's our intention to remain vigilant in the days and weeks to come. Our intervention was necessary to protect the broader U.S. banking system, and similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion.
Joining us now is Alexander Yokum, CFRA Research Equity Analyst. Good to see you. So are those statements in contrast to one another? Faith in the system, which is secure, but yet we're poised for further action if needed.
Yeah, I mean, I would say just in general, the comments were quite positive. I think that's why you're seeing regional banks outperforming today. I mean, there is some concern about the health of the banking system, but I think the large concerns about a bank run are largely behind us. Two Sundays ago, we had the comments that uninsured deposits would be made whole at Signature Bank and Silicon Valley Bank. And I think those comments took a few days to kind of go through. But at this point, I think people have calmed down a little bit.
So, Alexander, you don't necessarily think that we will see more runs on the bank because some of the regionals, yes, we are seeing, I guess, some reassurance today, but they have certainly been on a wild ride here over the last 2 weeks.
Yeah, so I'm a little bit less concerned about a full-fledged bank run. I think the fact that the banking industry has kind of helped out First Republic so much. But that being said, I would expect some deposits to move from regional banks to large banks. I am also concerned about profitability. Potentially we'll have higher regulatory costs for smaller banks, and then potentially deposit costs will go up. From 2019 to 2021, we had excess deposits. Banking deposits went up 40%. But given the recent news, I expect deposits to now be much more valuable, and therefore banks will probably have to pay more on those deposits, and that will impact profitability. And I would expect that to be more for the regional banks than the larger banks.
Secretary Yellen also mentioned a need to rethink banking regulations. Let's listen to what she said there.
We will need to re-examine our current regulatory and supervisory regimes and consider whether they are appropriate for the risk that banks face today.
What's your expectation on the regulatory environment? Is there anything they can do without congressional approval, which seems at best unlikely at this juncture?
Yeah, so I definitely think there's a chance that enhanced supervision comes down. So before this, it was at $250 billion in assets, and Silicon Valley Bank was just under that at about $200 billion in assets. So I wouldn't be surprised to see that come down maybe to $100 billion in assets, just given the fact that these large banks clearly caused turmoil when they went down.
Alexander, the flight of some of the deposits there from the regionals, you mentioned some of those larger banks are attracting some of that money. Who stands to benefit from all this?
Yeah, so I think the obvious answer is, is the larger banks. But I think it's clear that they don't want small banks to go down either. Because if you think about the financial crisis, probably a lot of banks initially thought they were gaining market share, and then eventually it ended up being bad for pretty much everyone. So I think they're definitely trying to keep, First Republic specifically up. But yeah, I mean, the larger banks, they are generally being viewed as safe right now. And deposits are generally flowing there, whereas a lot of the regional banks are seeing outflows. So I think larger banks probably is the answer. The only thing to note, though, is that because they've benefited from this, there's a chance that they will be required to help out a little bit more in terms of paying for this. So they've made it clear that this would not be paid for by taxpayers. It'll be paid for by banking, any losses from these failures. So because they've benefited, there's a chance that they'll have to pick up a little bit more of the tab.
And when it comes to First Republic, you say its actual location impacted where it is today in terms of its price, its the faith that investors have. Why so?
Yeah, I don't want to be too hyperbolic here, but I truly believe if they were based in a state like Alabama, they would not be struggling like they are now. So the fact that they are only 50 miles away from Silicon Valley Bank, their headquarters, and nearly half of all their deposits are in that Silicon Valley. How I think it played out is on Friday, when Silicon Valley Bank clients were trying to take out their money, and they couldn't. They're friends with a lot of First Republic clients, and they got really worried and started to take out their money. And I think that continued significantly on Saturday. And by the time the positive news came out about about uninsured depositors being made whole, it was a little bit too late. I actually heard anecdotal evidence that on Monday there was long lines in front of First Republic offices in the Silicon Valley. But in other places like New York, there weren't large lines. So I really think when all your friends around you get worried, you're more likely to, move your money than if potentially just one or two of your friends are getting worried.
Interesting. So how much do you think this is actually emotional?
Very emotional, because Silicon Valley clearly had problems, right? Their securities portfolio was very underwater, but banking is based on trust, and the second you lose trust, everybody gets out. So, like I said, I don't think First Republic would have gone down if Silicon Valley Bank didn't go down. Or I guess they haven't gone down yet, but just in terms of stock price, they've gone down significantly, and they have had deposit outflows. But yeah, I think it's a lot of just trust based, and I think emotions play a significant part. When people get scared, they just don't want to be part of it.
And Alexander, how much of the activity over the last couple of weeks has really been social media driven? So much of the panic that we certainly did see play out on Twitter, on Instagram, and on TikTok as well.
Yeah, so because this isn't credit-based, if it was credit-based, I think banks, eventually would get in trouble. But because it's securities portfolio-based, if deposit flows were slower, I think, potentially even Silicon Valley Bank could have been okay, and probably definitely Signature Bank. I think it goes a lot quicker. And like we were talking about, like with fear about First Republic, I think people, move their money, ask questions later. So I think, statements can get over exaggerated on social media, and the run can happen a lot quicker. I mean, there were reports that 25% of Silicon Valley Bank's deposits were attempted to be taken out in a single day. I don't think that could occur without social media.
I think it still remains at this point a Bloomberg report, but that the mid-sized banks pleaded for FDIC insurance backstop for 2 years. What's the likelihood, if in fact that request was made, that it is granted?
Yeah, it's hard to say. I mean, it's changing quickly right now. I think if another regional bank goes down, that is much more likely to go through. But it would definitely be good for regional banks as a whole, and probably stem a little bit of the bleeding. But it's a very fluid situation right now, so it's a bit tough to say.